Hi, my dear friends, welcome to Finvest Talks. Today, I'm just going to share my story. It is around 20 years back, I got married. I was in Colaba at that time, the new Nagar area. As a newly married couple, we went around and purchased vegetable. I still remember that those days, in 2004 and all, a bag full of vegetables would cost only 50 rupees. 50 rupees is the budget. You will put it in pocket. I will put it in pocket. Go and purchase the vegetables. I still remember aloo pyaj. The separate ready wala would be there, and pyaj would be, that is onion would be around 3 or 4 rupees per kg, and then pyaj would be somewhere around 4 or 5 rupees. That's it. And mooli for 2 rupees. So each this much big mooli. So that was a kind of a price that time. Nobody would believe even if I tell today. But looking at that price and then the price increase today, and then what would happen another 20 years, I got an interesting statistics for you. Please stay with me till end of video. Definitely this will open your eyes, and then it will prompt you to how to protect you and your family. So shall we go to the video now? And don't forget to subscribe before going there. Hi friends, you must be wondering why he is sharing his aloo pyaz story when he just got married. And this is for you, my dear friends, even if you are bachelor or just married. So 10 years back, I'm just coming from 20 to 10, petrol was costing around 60 rupees per liter. Now it is somewhere around 103 rupees. Then what could be in 10 years from now? So generally, I'm putting somewhere around 150 to 175 rupees. Grocery per month for 4. 10 years back, it was 5,000. I'm telling very basic amount of it. It's not a kind of a lifestyle daily. You go and purchase pizza and other things, consume it daily. Not for it. It is basically for dawal, chawal, roti. So whatever the requirement, day-to-day basis, the basic necessary things. 5,000 rupees it was costing 10 years ago. Then current average price somewhere around 10,000 rupees, without which you can't have a healthy meal, 3 meal per day. It is groceries for month per month. Even for somebody it may be 20,000 rupees. I'm just telling for minimum of minimum 10,000 rupees is required. It is excluding daily milk and everything, right? It is only for grocery. And what could be in 10 years from now? It would go to 20,000 rupees. Child higher education, 10 years back it was 10 lakhs rupees. Current average, even if you are putting in average of average college, 20 lakhs rupees is required nowadays for higher education. In another 10 years, so it will be somewhere around 50 to 60 lakhs. So because a lot of foreign universities are going to come, everything is going to be private university, most of which then you'll have to shell out more price, subsidies will be lesser and lesser. Then health expenses per year, it is not, I'm talking about health expenses means it is basic normal fever, normal cough, cold fever, normal thing. So health expenses per year, 10,000 rupees to us. Now it has come to 15,000 rupees, normal family of 4. And then it could be somewhere around 25 to 30,000 rupees going forward. Then monthly expenses for 4 in middle class and semi-urban and urban, I'm taking it a minimum of minimum, conservative kind of a basic bare minimum. I'm telling about 50 to 75,000 rupees is required. If you are in semi-urban, 50,000 rupees. If you are in urban, so somewhere around 75,000 with all amenities, EMI, everything. So put together, basic minimum you should require somewhere around 50 to 75,000. That's what I assume. And going forward in 10 years, it could be somewhere between 1 lakh to 1,50,000 rupees. So why I'm saying all these statistics, my dear friends? So definitely it would just open your eyes. It's not going to be the same. I'm just applying rule of 70. That is made a separate video how these financial rules, thumb rules you should be knowing. I'm just telling you what is rule of 70. So 70 divided by inflation, in those many years the expenses will double. Your purchasing power will go down. So that is rule of 70, my dear friends. So somewhere between 1 lakh to 1.5 lakhs is going to be your monthly expenses, no matter what will be the inflation wholesale price index. But if it is 7% consumer price inflation, it will going to double in years time, my dear friends. If it goes down, well and good, but keeping oneself prepared for coming forthcoming eventuality, that's always better. Speaking of eventuality, now the big question is, what if my longevity is not as expected? If I am not going to live that long of the average person, what will happen to my family? Who will take care of these bills? Have you ever pondered, my dear friends? If not, just spend a few minutes of your time and then ponder what you are going to do. If something happens to that person who is the in charge, who is the head of the family, any member of the family, who has to pay these bills month on month, it's very difficult. That is how, if somebody said that the how the families come to poverty, escaping poverty, people are talking about. If they are the basic uh, protection to the family is not given, definitely the possibility of any family going down to poverty trap is very very high. So poor are going to be more poor if they are not, if they have not protected themselves with the social protection like insurance, health insurance, everything. That's what we will see now. Today we will talk about who will take care of these bills forever. If something happens to me, who will take care of these bills? That is true not for 1 or 2 years, it's for forever. For my young family, this money should be going as a cash flow every month so that the family is protected. If you are serious about it, definitely you should be thinking of insurance. The first and foremost thing is term assurance, my dear friends. Term assurance is a recent phenomenon. It is a lot of people are aware of what is the benefits of term assurance. It is a low premium with high risk cover and without any maturity benefits. My dear friends, most of us, all of us, think that we are going to live long and happily. We will going to have a full lifespan, right? And then we are going to take back the money. Whatever I am saving, I want that money. That is why people want money back. But in term insurance, the benefits of term insurance are these are cost effective, covers death, normal life in India, abroad, or by accident. So it covers death in India as well as in abroad, and then or by accident also, accidental death benefit also available. And then in case of accident, there will be up to 50 lakhs additional benefit will also be given. Then tax advantage, you get ATC tax advantage in case of whatever the death sum assured family is getting, that is absolutely tax free, my dear friends. Then you can take multiple policies on different tenures depend on your requirement. It is not that one policy you should take. You can take one policy today and then next policy also you can top it up. Top it up means you can have a different policies for different tenure, different sum assured, and only requirement is that you need to continue the previous proposals which you have taken. And then one more thing, generally all the insurance company need, including LIC of India needs, you must be having a genuine income proof. That is minimum of 3 years IT return is must, my dear friends. If you don't have IT returns, income tax returns, yes, you may be having business because of COVID, 1 year you have not filed return. Don't worry, my dear friends. There are provisions. You can also take alternate. I would say that instead of going for term assurance, see, you can take term assurance, but if you feel that I also need return of money from term insurance, the best alternative is whole life plans. The best alternatives are whole life plans. So it gives you returns with bonus and guaranteed payouts, and policies like Jeevan Umang Utsav, they are also giving a tax-free return if taken under some conditions. Like in Jeevan Utsav, you have to take a term rider, but still Jeevan Umang is giving a lifetime return and then appreciating bonuses also. So it is a very good plan, my dear friends. If you are thinking of whole life plans, it gives up to 100 years. In case of term insurance, majority of the plans, it will give you only up to the age of 80 or 85 years. But in whole life plan, it is for 100 years, my dear friends. Because of our longevity is going to go up in future, because during our independence, it was somewhere around 40 years, and then in 70s, it was somewhere around 48 years. Now it's somewhere around 70 years plus, that is 70.16 years. Going forward in another 20, 30 years, because of the medical advancement, 100 years may be the normal, or 80, 85 years may be the normal life expectancy. At the time, you may need health insurance. I'm sorry, you may, yes, health insurance you may need. At that time, you may need insurance, right, to protect your family. So that time, these whole life plans are very much uh, useful. You can go for this plan. Best alternative to term insurance, lifetime 100 years, and the return with bonus and survival benefit, tax free with the terms and conditions. Then we also have the annuity plans like Jivan Dara, which is newly one, and it's popping up out here, my dear friends. All these plans are explained in different videos. You can go and check in my LIC plans. And then Jivan Shanti, Jivan Akshay, these are all the beautiful pension plans available. I also made a video for this. So that's it, my dear friends. Kindly subscribe, comment, and share, because I am putting some effort for these videos to make you more aware, and then by informed decisions you are purchasing insurance policies and then making financial decisions to yourself. Please subscribe, comment, and share. Thank you very much. Stay blessed. Bye bye.